Hi everyone and welcome to my weekly outlook with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've had this strong rise in treasury yields, which is really dominating market sentiment at the moment. There's a real fear that inflation is beginning to come through into the US economy. Subsequently, with the comments from Jerome Powell, the FOMC chair, last week, suggesting that the Fed was still a long way away from its neutral rate. Seems as though that there's further rate rises to come, and any sort of data that comes through now that suggests inflation is picking up is really going to be pounced upon by markets. And we saw last week that treasury yields broke out to multi-year highs. Certainly on the 10-year yield above 3.14% was a key moment, I think, in those bond markets. And certainly, I think, as I said, if that continues to move higher, we could continue to see fear coming through these markets. We'll see dollar strengthening, and we'll see equity markets especially coming lower. Similar to the moves that we saw in January on equity markets, for example, whereby the markets looked at the spike in earnings growth to potentially drive inflation coming forward. There was a big sell-off in equities then. We could see a continuation of that now, because in the last few sessions it really has started to sort of accelerate the moves lower. So a correction on equity markets could well be a driving factor there. So we've also got Italian bond yields rising quite sharply, and that's affecting the euro. Yield spreads in the eurozone are blowing out. You've got Italian over German debt over 300 basis points. That is continuing to look a cause for concern, and that's affecting the euro. Brexit factors are another impact on sterling. You've got news actually over the weekend that perhaps an improvement in the negotiations, or the improving relationship between the two sides seem to be coming through. You've got a speech by Michel Barnier this Wednesday, which could really have set the tone really for the weeks ahead. So watch out for that, and sterling is sure to be reactive there. So how is this all affecting Forex markets? Well, we've got euro dollar, which has been sort of trading around that 115 area. Break down below 115 on a consistent basis, I think, is a negative factor that will drag euro dollar towards 113, that key August low. So that is the thing to watch this week. Above 15 figure, it looks a little bit more positive, but it needs to be above 16 figure, I think, to really start to gain a bit of traction. In terms of sterling, we are, as I said, looking at all things Brexit for sterling, and any sort of improvement signs will help to support sterling. You've had it the last couple of sessions run higher on sterling, pulled back a touch on Monday morning, and it'll be interesting to see how cable sort of reacts now going forward. 130 big figures, psychological, but also basis of support area between 130 and 130.55. Something to watch there. Below 129.20 really does put the pressure back onto the corrective side on sterling dollar. In terms of dollar yen, it looks as though that a little bit of a correction has come through in the markets on Monday morning. Will that continue? We've got bond markets that closed in the States on Monday for Columbus Day. Will this correction on dollar yen continue through the week? But certainly looked as though that there is signs of a pullback towards maybe 112, 113 area is on the cards there on dollar yen. In terms of indices and equity markets, well, what we have seen in recent days is selling pressure or corrective pressure coming through. Corrective through Wall Street seems to be sort of accelerating through European markets. These European equities are seriously under pressure through Thursday, Friday, and into Monday. That has continued. Coming back towards key support areas, 11,865 on the DAX, 7,220 on FTSE 100 are two key levels to look out for there. They break to the downside, you really are suggesting there is a change in outlook. So it's really under pressure. For the S&P 500, it hasn't yet really decisively broken any real key levels. 2860 area was an old key high which became supportive, so that is something to really watch though. Now, in terms of commodities, well, we've got the dollar strengthening, which is again a drag on gold, but you do have the aspect that gold is additionally a safe haven play as well. So any sort of move that tends to come with a safe haven move will tend to sort of underpin gold to a certain extent, but still I think the dollar remains the key driver. The negative correlation between gold and the dollar remain in play there. For the oil price, well, we've had the sanctions that are affecting the Iranian oil supplies. they are certainly helping to support the oil price, but then you get the negative aspect of bond yields spiking higher, impacting on risk appetite, pulling the oil price lower. So that's why we've seen a bit of the correction coming through the oil price in the last few days. It just depends on how far the markets take these bond yields rising, and if that continues, then I think oil will look to be a bit more corrective. So for the rest of this week, well, there's not a great deal of data really, apart from this US CPI data which comes out on Thursday. You've got the PPI on Wednesday, but the main focus will be this CPI, the Consumer Price Index data for the States. This is obviously hard data. Up until now, we've seen soft data affecting the markets. That was the, in terms of pulling the yields higher, that was on Wednesday, where we saw the ISM non-manufacturing data affecting these bond yields and affecting bond markets negatively. Well, now we've got time for the hard data, the CPI, the inflation data, which I think will have a big factor on these markets this week. Core data is expected to come a little bit higher, headline data a little bit lower. So it'll be interesting to see how we get any surprises there and how it affects the bond yields, because I think bond yields are playing out as a key factor throughout the markets at the moment. A little bit of Michigan sentiment at the end of the week, but much beyond that, maybe some Chinese data to affect the Chinese yuan and how that affects through emerging markets. But other than that, we're basically looking out for dollar moves. So with that in mind, I wish you good luck in your trading, and I'll speak to you next time. Thank you.